Thank you very much indeed. We look pretty well attended, and we've only lost one person walk out before we even started, so I'm pretty pleased about that. Right, the good news is this is 1 hour long, and it's going to be a pretty rock and roll ride. I've told the panel in the advance conversation I don't want any slideshows. I don't want any long, boring presentations. I want animation. In fact, I don't want to do any work here. I just really want to be the traffic cop directing them to each other. If they don't do that, I will get involved. The bad news for you guys is I'd really like you to get involved as well. And just in that spirit, of the audience now, does anyone have an energy background, or you're in the finance industry? Let's start. Energy background? Sally, I know you are, a few. So we're talking about 1% of the audience. And finance background? So the vast majority, and I can presume there's one or two academics and philanthropists in there as well. Okay, so what I really would like to do is get you guys involved. Now, I know from experience, as indeed does the panel, but sometimes audiences are useless at getting involved. They get shy, and even though you guys are all C-suite and all high net worth individuals, you'll get a little bit shy. So if you want to get involved, do. There's no such thing as a stupid question, apart from some of the ones I'll be asking. Anyway, so look, in that mind, let me just go through this. This is called Wealth and Power, Energy and the World Economy. And if anyone saw the blurb in the piece, quite frankly, there are about 30 issues there. It would take us about 4 hours to go through them all. We're not going to do that. I'm just going to make a couple of very quick opening remarks. Then each of our panelists is going to get a nice, easy opening question, and then we're going to really start the fun stuff. Right, wealth and power. I wasn't sure if we were talking about power as in electricity, as in energy, or who holds the reins in the industry as well. And I think the latter point is actually quite relevant, because we've seen some meteoric shifts over the last 30, 40 years in who holds the power in this industry. Many of you will be aware, even though only about 3% of you are in the industry, that it used to be the international oil companies who held most of the global reserves, 80, 90% by various measures. Now it's the national oil companies that hold those reserves. So that's one big change that we've seen as well. We've also seen from the late 80s, early 90s, sub $13 a barrel oil. Then we saw it up at the height of the crisis to $149 a barrel. Now we seem to have stuck. So what does that mean? Does that mean that's a better operating environment, a better investing environment, or actually has this been to the detriment of the global economy? The fact that we've stuck at circa $100 a barrel. Why didn't we stick at $60 a barrel? I thought one of the most wonderfully misguided pieces I read a couple of years ago was The World in Preview, The Economist. Oil could be the Deus Ex Machina this year. If we see oil prices down, the global economy is going to be great. And then it didn't happen, and nothing happened. And we're still where we are. So I want to think about all those issues as well. And I'll just remind everyone, despite the fact that we talk about the end of OPEC dominance because of reserves being found elsewhere, new types of hydrocarbons, the shale revolution in the States, OPEC in 2012 made just a cool 1.26 trillion petrodollars. But that's good, because that was invested elsewhere in the world economy, or wasn't it, as the case may be. Enough of me. Right, you can see in your notes who the panel are. I'm not going to go on about it too much. Safe to say, on my far left, we have Riemer, who is the Director General of the World Petroleum Council. Next to me, we have MacDonald, Vice President of Chevron, Europe, Eurasia, Middle East, E&P. On my immediate right here, we have Allonby, who is a Managing Director and Portfolio Manager at BlackRock. Next to her, we have Paul Hinks, who is the CEO of Symbion Power, Chairman, Corporate Council in Africa, who's told me, don't you dare ask about E&P in the oil industry. Maybe it would just be worth doing that for a laugh. And then on the far end, we have Francesco Giuliani, who's the Managing Director at First Reserve. Right, let's start off with you, Francesco. I asked everyone just give me one good salient point, or a couple of salient points they thought the big issue for this panel they would like to discuss were, and you started off with the outlook for investing in energy in the years to come will look very different versus the last decade, from searching to hydrocarbons to providing access to it at acceptable cost. What do you mean, Francesco?
Well, you said it earlier, there's been a shift in terms of where the resources were. At the beginning of the year 2000, National Oil Company actually had the vast majority of resources. Starting in 2003 and 2004, there's been a big push on the international company to go find new resources. And actually, the last 5 years, 70 billion barrels have been found. And have been found at the very frontier of technology, deep water, heavy oil, until the shale revolution came around. The reality is that if we spend trillions of dollars over the last 10 years to find the resources, the next wave of investment, the way we see it, is actually taking the resources out of the ground and moving to where they need to be consumed. If you think about North America, the energy infrastructure of North America was set up to actually take crude coming from offshore into the coastlines, refining processes that bring them inland. Now it's going the other way around. Crude is being produced inland and needs to be taken to the coastlines, which creates billions of dollars worth of incremental resources to go into the infrastructure. And that's similar to some of the new plays in deepwater Brazil or West Africa or East Africa. Resources have been found, they are there, they are under the ground, but haven't been developed. And the new project seems to be much larger and more complex than ever before. So the real question mark for the next 10 years is, are we going to be able to actually access the resources at affordable cost? And just back to your point on prices, to our math, and you have a lot of studies in the industry, it takes $75 to $80 to actually get the resources out of the ground when you are ultra deep water. So if you go below that, you're going to have a bunch of fields that you will not be able to produce economically. And those are 5 years development plans. So at the beginning of that development plan, you need to know what the oil price will be starting from year 5 for the following 20 years. So that's the challenge that a number of the major oil companies are facing today.
So what is the technology there for all these, to get the resources out of the ground?
Some of that there is, and it's a matter of technology and cost. The reality, listen, it takes $200 million, anywhere between $150 to $200 million to drill an exploration well offshore deep water. If you need to do, and the success ratio went from 1 out of 20 to 1 out of 10, depending on where you are around the planet. Those are big generalization. So if you can improve your ability to drill less wells, that it's a big improvement. So it's not only about efficient drilling, but also doing less of the same. So technology is getting to that place, but we are still not, it's still going to take 5 years to get there.
What about those people over at OPEC who are quite happy with their share of global reserves, are quite happy with their share of future global reserves, and they see the revolutions going on in shale, in technology, and they say, hang on a second, I don't want to lose my share of the market. I'm quite happy with things as are. In fact, so much so that I'm conducting a review at the moment which will give the evidence to people at the next meeting just about the effects of shale and what that's doing, and then we will have a policy response therefore accordingly. What about if some of the producers are very happy with their share as it is at the moment, have a price response to that $75 to $80 you're talking about in order to snuff out the competition?
It is the right question to ask.
Thank you.
And the answer that you were prepared. And the answer, and you have multiple answers. Listen, from our perspective, the OPEC price balance really has to do with their ability to provide wealth to their local growing economies. And again, if you do multiple maths, but there are a number of studies out there, $70 to $75 is actually what a number of the OPEC countries need to continue to grow welfare and wealth within their economy. That is their main source of income. So that is actually the tricky points for them. They cannot afford to go down in price for too long and keep their economy functioning at the current levels.
All right, lovely. Let's move on to Paul. You're the CEO of Symbion Power, and the point you wanted to talk about was Africa and the opportunities that now exist there for independent power sector. Mike Milken last night was talking about Africa. He was talking about emerging markets as well and the demographics, which are very favourable, and how, for instance, in telephony, they are getting to near 100% penetration as well. Why are they still light years behind in terms of their energy development of their industries?
I think they're light years behind because of the fact that the countries that we're talking about, mostly sub-Saharan Africa, those countries have been short of money for years because of the fact that their economies were, in a lot of cases, failed states. And what's happening right now is that you see several countries in Africa, in sub-Saharan Africa, the sort of Tanzanias, Nigerias, Ghanas, Kenya, Rwanda, etc. Those countries are coming on. And what's happening right now is that the energy deficit, people are starting to fill that gap with investments.
So let's just pick a random country there. Nigeria. Let's pick a random international oil company, Royal Dutch Shell. And we can say, OK, I'm Royal Dutch Shell. Yeah. I have a very strong... And you say they're coming on. They've been around a long time, so I'm going to dispute you slightly on that one. So you've got Royal Dutch Shell, who are having millions of barrels a year taken from their pipelines. Their investment is enormous, but they are concerned about the viability of it. You've got the government and the company trying to find a way through this as well, but actually it's a great barrier to expansion of those operations. And is it a metaphor for broader Africa as well? The issues that someone like Nigeria, which is no newbie on the block, I mean, it's a well-established member of the the OPEC cartel. Isn't that a metaphor for the problems of developing energy resources in Africa?
Well, I think it depends upon the approach of the companies that you're talking about. I mean, Nigeria, yeah, the oil companies, Shell in particular, have had a lot of problems getting their oil out of the ground and delivered to the market because, as you say, it's been stolen. But it's questionable whether or not Shell and other companies, IOCs, have actually managed their public relations with the local populations as best as they could really do.
They're paying the revenue, they're paying it to the exchequer in Nigeria. Surely it's the government's responsibility, isn't it?
No, I think it's no, not at all. It's the government has its part to play, but companies like, for example, our company, Symbion Power, when we go into a country, we do an awful lot to make sure that the communities in which we're working, we're building power systems, power plants, transmission systems. We spend a lot of money working with the local community so that they get something out of it, us being there. The problem in Nigeria is this perception that they're taking the resources out of the ground and taking it away, and that the local population isn't getting a reward from that. You have a similar problem with the gold mines in Tanzania.
Paul, I'm sorry, I'm going to come in here. They pay their money for the reserves, they pay their money for the extraction rights. What the exchequer does with it in Nigeria is their problem, isn't it? The fact that they're not sharing it with people in the Niger Delta and elsewhere is not Shell's fault, is it?
I'm not saying it's Shell's fault. I'm saying that they could do, in my opinion, personal opinion.
Hey, I'm not an apologist for the IOCs. I'll leave Ian to do that. But
no, my opinion is not just the IOCs, but many companies operating in we're talking about Africa. What I see is that, yeah, they're there to do business, but they don't do enough for the local populations. And I think if they worked harder at it, then I think it wouldn't be quite so bad.
Poppy, thank you, Paul. Unlike other commodities, oil prices remained high and relatively stable over the past few years. I agree with you. In fact, I just said that, didn't I? How do you invest in the flat oil price environment?
Well, it comes back to some of the comments that were being made earlier, that the amount of capital that is required for these projects is growing and growing and growing. The scale of some of these projects is so large, so we're laser focused on returns. And there's a big variety when you look at different companies, different projects about what the break-even prices are, what kind of returns you can make. And so finding those companies, finding those assets, finding those projects that work in a stable price environment is kind of really what we're looking at.
But the fact you have got a stable price environment is fantastic. And that stable price environment is at $100 a barrel, give or take the change. This is unprecedented historically.
Yeah, and it comes back to kind of comments that were made earlier. I mean, these are long-term investments that the industry is making, with the exception probably of shale gas, which is quite short lead terms in the US. You are investing in these deep water projects and making assumptions about what prices will be in 5 years, in 10 years, and 20 years. So actually, you're right. From a project management perspective, a high and stable price should be good for more or less everyone, the consumers and the companies and the planners.
Do you think it's great for consumers, the current price?
I said a stable price is helpful. I think one of the things that was, when you look at so pre the financial crisis, when you had prices going up and up and up and up in quite short order, I think that made planning for the consumer and the companies quite challenging.
But I mean, in terms of the investment criteria, Francesco was talking about the $75 to $80 a barrel and talking about the extra expense from some of these deep water explorations. Why would you bother with deep water exploration when there's so many other easier ways to get energy out of the ground now?
Well, almost all forms of the marginal barrel is getting more and more expensive. So it's not just deep water. I think when you look at some of the, certainly the kind of some of the oil shales in the US, and some of my panelists may have some other comments on this, but that's quite high cost production. So even though you're seeing a lot of volume coming in the US, you really need $80, $90 to make those projects economic. And we've seen periods, last year, for instance, where prices fell back a bit and we did start to see an impact on drilling. And what's interesting about the players in the shale development is that they should all be economically incentivized. These are independent companies. They're not got a social contract. They're not. That's not necessary. That shouldn't be their motivation. It's to make returns. So I would expect if prices fell and the projects weren't viable, then you would have a supply response. In the case of shale, that should be quite quick.
Or they could just do what they do with the gas and just flare it off from these shale projects and just let it go into the atmosphere and waste it, really, couldn't they? Which is what they're doing, isn't it? Because they can't get the price for it.
For the gas or for the oil?
For the gas.
Well,
to get to the oil, they're just flaring off the gas, aren't they?
One of the great questions for America and opportunities is how to use that gas. I mean, America has this advantage that probably we don't fully understand here. I mean, the gas prices, natural gas prices, are a fraction of what they are anywhere else in the world. And I think when you look forward at sort of long-term investment opportunities, really how the US can capitalize from this cheap gas, whether it's in petrochemicals, whether it's in exports, whether maybe even it's in natural gas vehicles. I think that will be something that we need to be watching over the next decade.
Ian, what can we learn from North America's energy renaissance and how it applies to the rest of the world? I mean, Poppy's raised a whole host of issues there. Why don't you just answer that point that you've raised as well, and then we'll move on to a couple more shale points.
Well, I think what North America has shown is that in a liberal investment environment, there are many, many companies willing to take the risk, invest the money, and develop resources. The oil and gas industry is a fairly unique industry. When you look at most industries around the world, there's generally speaking 3 or 4 players. A couple of aircraft manufacturers, a few automobile manufacturers. Oil and gas is hundreds. Chevron, by market cap, now is the second biggest company in the world. We produce a little under 3% of the world's oil and gas. And that's just the nature of our business. So in North America, by allowing the development of the asset, you've seen this tremendous renaissance of the oil and gas industry there. Gas prices a fraction of what they are in Europe, a quarter of what they are in Europe. It's given an enormous competitive advantage to American industry, to the steel industry, renaissance of the petrochemical industry in North America. And the same is beginning to happen with the oil industry. You're right what you say about tight oil. It's not cheap oil. There's a price at which it becomes uneconomical. It's around $70 or something like that. At that point, it becomes uneconomical. But it's a market. A price of $100, $110 has allowed new resources to be developed, tight oil to be developed, deep water oil, and that is keeping the price stable.
Are the Americans going to export anytime soon? Why would they? What do they consume? 18 million barrels a day, and they're producing between 8 and 10, are they?
It's hard to see that they would export oil anytime soon because they're still net importers.
So we'll rejig those LNG terminals.
But gas, they've got there's 2 LNG projects have been permitted and will get constructed. How many will get permitted over the next few years? I don't know. I think there's probably a limit. Probably not too many. Probably less than in single figures.
We don't have any environmental issues about shale, no?
It's a good question, the environmental question, because I get disappointed, and I think many people in this audience probably get disappointed by the level of honesty in the debate about fossil fuels and the need for fossil fuels in the future. Oil and shale gas is developed safely. In North America, it's developed 2 to 3 kilometers below ground, well below any aquifers. There's not been one single case of a shale gas well contaminating an aquifer. The industry has probably fracked some 2 million wells in the last 50 years. It is a long-established, safe practice. The opposition to development of shale gas and tight oil generally comes from those who are opposed to fossil fuels, period. Right. And they're not honest in the debate, so they tend to attack the nature of the production rather than really address the issue themselves. When I look at that debate, and we look at a population today of the world of 7 billion, in less than 30 years, that will be 9 billion. The GDP of the world will probably triple over the same period. The number of personal vehicles will probably double over the same period. And to pretend that fossil fuels and oil and gas won't be an incredibly important part of that mix for the foreseeable future.
All right, just one more for me then.
Unrealistic.
Why are we still flaring the gas if it's so precious?
Well, we don't flare gas. Chevron has a very strong policy, which
The
is
industry is though, isn't it?
opposed. I think you'll find in North Dakota and South Dakota, North Dakota where the back end is being developed, it's a long way from any market. And so they're struggling to find a way to get the associated gas to the market.
Okay.
So I think there is a temporary issue there, and it should be addressed, and it should be addressed quickly. It behoves the industry not to flare.
Dr. P.S. Riemer, I didn't know you were a doctor. Of course you're a doctor in chemistry, aren't you?
I am indeed.
Yeah, of the World Petroleum Council. So what's your big issue?
We have lots of big issues, but the biggest is probably young people. Young men and women, and trying to encourage
Is that
them.
why they need $75, $80 a barrel? Because it's too expensive to get the people?
No. In fact, with WPC, it's quite interesting because our membership represents 95% of the world's oil and gas production and consumption. So we see the problem from all angles. If you go to Indian or Chinese universities, the students there see it as an honour to join the energy industry, and there's no shortage of engineers or scientists. If you go to Western universities, it's a totally different picture. There are less people studying science and engineering, and it's a big problem in the future because the sort of demographics of the oil industry at the moment, they're sort of grey-haired like me, and we need, we can have all these investments and all the things that we need to do for the future, but we need qualified men and women
That's
to do that.
yesterday's story, isn't it? I mean, you and I were talking about this in Madrid about 4 years ago, weren't we? The fact is, all those juicy six-figure salaries, $100,000 plus entry for some of these graduates coming out of these educational establishments, it's enticed people away from the city, from your industry, into engineering, hasn't it?
I think there are still lots of science graduates going into banking and finance and not going into the oil and gas
But
industry.
they're churning out hundreds of thousands of graduates in this industry and engineering who are qualified in geology out of these Chinese and Indian universities, aren't they?
Oh, they are in China and India, yes. Because
Well, then we can import them, can't we?
We could do, because when we talk to our Chinese colleagues and say we have a problem with not enough chemical engineers, they say, how many do you want?
So where's the problem? I'm sorry. Is it visas? Is it we can't bring them into the country, or we can't bring them into the countries where they're needed? What's the problem?
I don't think that's a problem. It's a question of whether you want to have employment in the countries where you're having these projects in Europe. And you need a local base. Like the gentleman said about working in South Africa, you do need a social license to operate, and part of that is to involve a local community, to educate the local community and employ the local community in your projects.
So the problem is movement of labour?
Possibly, yes. Well, it's movement and an attitude as well of people not wanting to do science subjects. They're hard subjects. Lots of young people now go for softer degrees.
What? Humanities or something? Or home economics?
You can say that, I couldn't possibly comment.
Last time I did that, one of my colleagues turned up and said, I did humanities, what's wrong with that? Paul, are you finding this is a problem, the skills base?
Massive problem. And, you talk about youth in Africa. I think the demographics are something like 50% of the people in Africa are below the age of 30. So something similar to that.
And probably voracious for education, aren't they?
Totally. But before we came up here, we were talking about Mozambique, for example. Anadarko have found large gas finds off northern Mozambique. In southern Tanzania, Exxon and Statoil and British Gas have found huge reserves off the coast of Tanzania, Mtwara. The big problem that they're all going to have is finding the skills in those countries to build the LNG facilities that they've now got planned, because they're deepwater wells and they've got to bring them onto the shore. So yeah, I mean, there's huge problems. We have a policy of setting up training schools wherever we work. So for years I've had this gripe that some of the biggest companies in our sector, I'm British but I live in the United States. In the United States, they have in the US, they have apprentice training schools. They send people to colleges. They spend a lot of money.
I don't get it, guys. I don't get it. We've already established there are hundreds of thousands of graduates everywhere. For qualified individuals, there seem to be no visa barriers. If the skill is needed in the country, the UK is a great example of we're not afraid of taking, for instance, the whole of the Ghanaian health service, which has been trained up. We have a vast number of African-trained nurses and doctors, Indian-trained doctors as well. We're very happy to import skills wherever we want. Does Chevron have problems finding the skills?
We do find the skills, but it's an issue. Before you embark on a major project, it is a question. Do you have the organizational capability to really successfully undertake this project from beginning to end? I think what we've learned as our workforce has become far more diverse, far more international. When I look at the staff who work for me, they're drawn from 10 different countries here in London.
That's great. That's to London's credit, though,
it is to London's credit, and hopefully they keep that up and don't shut the door on it. But one of our biggest operations in the world is in Kazakhstan, in Tengiz, and we have several thousand employees there. And what we do there is we every year we take 100 of those employees, send them overseas to other locations, rotate them through 2 or 3 assignments, knowing that they can go back to Kazakhstan at some point in the future, take up senior positions there. And I think that we just have to cast our net wider for the skills we need. It's a great industry to be in, and we need to be more, I think, aggressive in selling it to young people and in selling it to young graduates.
All right, before Francesco comes in, come on in, you lot. You've got to get involved again. If you have children, or if you're going to have children, do you want them to be in the city or do you want them to be engineers? You've got a straight choice. City, engineering. Look at that. Look at that. I know. I said the same thing as well. I've got no chance with my kids as well. Francesco, come in.
I'll give you my experience. We have a couple of examples. We have an helicopter company in Brazil that is taking people on and offshore and requires Brazilian pilots for Petrobras requirement. And so if you're trying to get a Brazilian pilot right now, we're trying to import Brazilian pilots from all over the place. And the average salary for those individuals is anywhere between $500,000 to $750,000 for a pilot, helicopter pilot. So, and it's a complex job by all means, but that tells you that we're trying to find more Brazilian pilots all around the world. So we go into Australia looking for Brazilian pilots, and we can't find them.
Well, they've only got to speak Portuguese, haven't they?
No, they need to have a Brazilian passport. Absolutely, yeah.
Well, that's a Brazil problem.
You can try to convince Petrobras.
That's a great emerging market issue, isn't it? And it's
I'll give you another one.
WTO should have wiped out years ago.
I'll give you another one. Offshore Angola, we have a company called Cobalt developing a deep water field in offshore Angola in partnership with Total. So we sat down with Total and looked around on how many project manager for the development of that field, which will be a $5 billion project, exist. And there were 12. In Total, combined between us and Total, we can only come up with 12 names. The entire company only had 12 names that could manage this project. 11 of them were actually already employed, so we could find one. But so the intersection between the skill set, the availability, and the location, by the way, the real question is, would you rather have your kids go into finance and then have a job in London, or go to engineering and have a job offshore in Nigeria? That's the question.
Well, you've probably got longevity in your career, earning £750,000 if you've got a Brazilian pilots. Anyone Brazilian in the audience? Case. Could you fly? No, right, none of you. Okay, Poppy, do you want to come in on this one?
Well, I think that actually some of it comes down to this license to operate issue, in that the industry does need to work with communities to have local employment, to understand some of the environmental issues, and all of this is, I think, is very linked to that. The need to have a social license to operate in the country.
So a social contract, not only with a formal contract with the government as well, but a social contract with the people you're going to be working with as well. Actually, before you come in, Pierce, on this one, Ian, you're not the apologist for the IOCs, but I mean, just this relationship issue we talked about between Royal Dutch and Nigerian. I mean, do you have sympathy for the Royal Dutch Shell situation that they found themselves in as well, or do you, without wishing to cast aspersions on a rival, do you think that actually they're responsible for some of their own issues?
I'm not going to talk about Royal Dutch. No. They can talk for themselves. But we're also in Nigeria, and different companies are in different positions. So if a company is completely offshore, you'll find that it's relatively unaffected by community issues. If a country has a large part of its production onshore, it's going to be much more affected. And Shell was in that position.
Regardless of how they treated local populations. It's purely about geography.
Shell, I imagine, like any other the major oil companies, puts a lot of effort into community affairs and into sustainability. You do have to have a social contract with the country in which you operate. You do have to work with the communities. It's one of the, when we entered Eastern Europe recently, and we knew that there would be concern and opposition about drilling operations and so on, and we put a great deal of effort into community affairs, people into town hall meetings, into explaining what we're trying to do, and into looking for opportunities to enhance the lives of local communities.
But it transcends business, doesn't it? Let's not kid ourselves. When you go into these frontier mining areas in many, many ways, these new frontiers as well, you have to have as deft a hand politically as you do at extracting the stuff out of the ground as well. I remember speaking to John Brown about this, Lord Brown, Son King Brown of the BP during those great expansion years, and I asked him about Russia before the whole TNK thing. Are you a politician or are you a businessman in Russia? And very much. He said, yes, I'm both. I'm a politician certainly as well. Correct me if I'm wrong, have you had issues in Brazil with dealing with the government and dealing with legislators as well? I just wondered, I mean, was any of that avoidable?
Well, you always look back on everything and say, well, could we have done things differently? Could we have prepared for this better? Could we have had worked this differently? It doesn't transcend business. It's an integral part of our business. Working with governments, communities, and being sympathetic and sensitive to the needs of your host countries is essential to our success. If we don't do it, we don't succeed.
All right. Let's get one more on this, Piers, and then we'll move on.
Well, yeah, I think gone are the days where you would set up in a country, build a wall around your compound and import all the staff, and then 10, 15 years later disappear. You are in a country for long term, you are going to be there for 15, 20 years, and you want to maximise the local employment and the local activity so people know that they benefit from what you're doing. Just going back on the staff thing, we're in northern Canada, and the oil sands, and we're talking to one of the lawyers from Suncor, and she basically said, if you've got a pulse, we'll give you a job. They're that desperate for people.
Extraordinary. Right, I'm going to do it slightly different here. There will be ladies at some stages going around with mics. Before I finish on social contracts and employment in the oil industry, does anyone want to get involved? I know you look all very shy, but if anyone... There's a lady there. Sorry to have put this one upon you, but I thought I'd do things differently. And you can address it to anyone you like, apart from me.
Okay, well, it's just a general remark on the last topic. I worked for 5 years at the Ministry of Finance in France. One thing that major French companies do it can be the oil industry, Total does this a lot, but it can be aeronautics, whatever. Many times, one of the conditions for a concession or a contract in a foreign country is to employ local engineers, local management and engineers. And so they have a kind of triple venture with the company, the Total or whomever, the French Ministry of Education, and the local government. And they set up a school where the location is provided by the country, the local country. The French Ministry of Education provides the pedagogical methods and the professors, and the students come from the country, and Total provides all of the equipment, sort of finances the entire institution, and knows what kind of training they need. And so that over a period of years, they end up actually producing the type of people that they need, and they can satisfy the requirement. And they also, part of this, because the French Ministry of Education doesn't actually get paid for the services of their teachers, but the company will also put in fantastic equipment in the schools in France.
But that adds to the cost of production, doesn't it? Paul, do you want to pick up? You're looking at putting local employees in as well, but that adds to the... And thank you very much indeed for that. It's superb. So that lady can do it. So can the rest of you. Paul, I mean, using local employees and educating them locally, fantastic, yeah?
Yeah. It's interesting what Ian said, that, was it Ian or Pierce, that in the old days, people would go in and put up a compound, bring in their expats, have a wall around it, and there was life inside the compound, and there were the locals outside.
Yep.
And I go spend a lot of time in Africa, and I go around, and I still see that. That's still happening. It's happening in Tanzania on the gold mines. And there is this conflict between the people who work in these facilities and the people outside. And I think that's changing a lot, certainly in Africa.
It's not, is it? Hmm? It's not, is it? Look at Algeria. Look at the example we just had.
No.
Algeria,
yes.
Look at Nigeria. I mean,
No,
you can't walk around the streets of Abuja, can you? Abuja, I beg your pardon.
Of course you can.
And there's no security implications in Nigeria at the moment, no?
No, there's security implications, but not to the level that people are reading about it in the press. It seems much worse than the reality of actually being there. I go to Nigeria.
You're blaming the media now, yeah?
No, I go to Nigeria. I go to Nigeria a lot, and I walk around Abuja and I walk around Lagos.
Yeah.
And in fact, Nigeria is a great example of a country I wouldn't. For the last 30 years of my life, I didn't want to go near Nigeria because I heard all the terrible stories. But believe me, if you go there today and you're doing business with the government in Nigeria, it is a very, very different place than what you read on.
I'm going to put this one to bed. Thank you very much indeed for that. Well, let's. Actually, there's a gentleman here. Let's have one more comment there.
I was wondering if I could address the social contract side
of
things. And this is really to anyone on the panel in response to one of Stephen's questions, or at least the implication of Stephen's question, which was, if a company, if a multinational had a better social contract, it might have a decreasing, it might have an effect, positive effect on theft, corruption, other criminal problems. Does anyone believe that to be true? Or is it such that the level of the criminal class, the rise in piracy, the sheer amount of money, the level of corruption, not just in Nigeria, but elsewhere in many oil-producing countries, that there is any connection between the social contract and the problems of theft that we may face down the road, or is Stephen being hopelessly naive?
I'm always hopelessly naive and hopelessly ill-informed. Francesco, do you want to pick up on that one?
The unfortunate answer to that question is it really depends. And let me give you some real example. We're building a power plant out of Damascus in Syria. It's a tricky place right now. So we have people on the ground. We're importing gas turbines. The company is building it is Ansaldo, is an Italian company that we own. And we had relationship with the Syrians for the last 25 years. We've been in country for the last 25 years. And when this plant was coming up to be built 3 years ago, despite the situation was difficult at the time, we just didn't want to let them down, and we went ahead and started building the plant. And we have perfect security. We didn't have one accident. We didn't have one fatality. It's extremely complex to build a power plant, but we're doing it. So it really depends. You can't really parachute into a country and say, hey, here I am, let's do a contract. A lot has to do with relations and how long you've been there and how well do you know the locals and how do you set up your local presence. It can be done. Okay. But it's not.
I'm going to interrupt you because I know that we're only getting through a couple of the issues. But I prefer to do a couple of issues really well rather than just skirt through everything as well. But Poppy, you work for BlackRock. You don't care whether it's a social contract or not. Really, you kind of just want the best return for your shareholders, don't you, for your investors? I know it's a bit brutal of me to talk in pure capitalist terms.
Well, I think that it's project success and execution depends to a large degree on having that social contract. And this is an industry where we're investing, we and others around here are investing on such long time frames. And these are fixed assets, right? It's not a helicopter. Typically, it's not a helicopter business where you can remove the helicopters. These are investments in a country that are effectively, if things go wrong, you still have those investments. And so I think having those strong relationships and maintaining and thinking about some of those issues is actually important for the outcomes. And we can think of, everyone here is aware of some very high-profile examples where things have gone wrong from a safety, government, repatriation perspective that has had a real negative impact on equity holders such as myself.
I'm going to give this gentleman, actually Piers, you come up with a quick point, then I'm going to give this gentleman a mic. Keep these two comments really quick. And
okay,
then we'll
well very briefly, there are some very good case studies to show it does benefit companies by doing things properly. You've got the Dow Jones Sustainability Index, so you can see that people that do things correctly outperform companies that don't necessarily do things properly. There's some very good examples of oil companies operated in the Yemen, where you have a company which does barricade itself in, employs no local people at all, and hasn't done very well on all the things that you mentioned about theft and about sabotage and things. You have another company adjacent to it that does totally the opposite, that over the years has involved the local community and now has a sort of over 60%.
Go on, name some names.
No, I won't name names. They have over 60%. Well, the good guys are Nexon, and they have over 60% of local employees from there, and had over the years very little trouble compared with other companies.
All right. So the best corporate sustainability practices and social contracts of local community, they tend to have the least problems as well.
Yeah.
Can I bring this gentleman in?
Two very quick things. Firstly, we talk about the local issues and having a social contract locally. How about the cross-border, quite complex geopolitical issues? If you're dealing with Algeria, the overspill from the regional conflicts. If you're talking about Nigeria, again, you're going up. If you're drilling in the Congo, there's so many issues regionally. Who do you deal with? Are you dealing with the African Union? Are you dealing with the local government? Who should you be dealing with first? And secondly, is part of the problem the lack of trust between the people on the ground, the population, the government, who they really either they don't like or they don't trust, and a Western corporation who feel they grab it?
Sorry, are you talking about Europe or emerging markets?
I'm talking emerging markets.
No, I was being ironic, actually. I knew you weren't. We don't have a problem with our governments in Europe at all, do we? Ian, can I ask you to pick up on that one, if I may? Because obviously in your role looking at all these areas as well, I know you're not specifically looking at Africa, you're looking at Eurasia, EMP as well. Who do you deal with? And answer this gentleman's question.
Well, you deal with your host government.
Yep.
I mean, first, that's who you owe your responsibility to, and that's who you work with. And if there are issues with surrounding countries, you have to be cognizant of it. I mean, as a company, an American company will deal as well with the U.S. State Department and others to understand.
But you're always going to be going into an environment, as this gentleman said now. But there are no easy markets left. There's all the markets that are left really are ones where you potentially have got populations at odds with their government.
Well, I'll give you an example. We recently, last year, we entered the Kurdistan region of Iraq. And we have 3 blocks there. We've got 2 rigs drilling now. And that's an area that obviously has some border issues. And in Iraq or Syria or whatever. And we have a very close, effective working relationship with the Kurdistan regional government. They're our hosts, and they're the people we work with. But we also have relationships, of course, with the government in Baghdad and the government in neighboring Turkey and so on. The neighborhood is very important, and so you have to be cognizant.
Okay, no, I'm gonna leave those issues there on that point. What I want to ask you guys is, because I know we've got about 15-20 minutes left, there are a whole host of issues I can talk about. Anything burning you want to talk about in this broader energy debate? This gentleman, he's been putting his hand up very patiently.
I'm afraid I'm going to disappoint with how burning this question is, but one of the things that strikes me as being interesting about the United States is the relatively low thermal value of natural gas, as well as the relatively low thermal value of coal versus crude. I'm curious to see to what extent you think gas to liquid technology may be part of the gap that gets bridged, given that it's quite difficult to export those therms outside the United States. Thanks.
So that is part of the broader transportation, storage, gas to liquid. Who wants to pick? Poppy, do you have a view on this?
So the reason why there's the gap is the different usage, primarily, in that gas and coal are typically used for power, and liquids are typically used for transportation. So I think, and there probably may be some other comments in the panel, but one option is potentially to turn the gas into liquids, and I know that there are a number of projects being mooted on the Gulf Coast to do just that. And this is a technology that some companies like Shell, Sasol have done elsewhere in the world. I imagine that some of the considerations are the relative economics, so the relative economics of that versus LNG, and also versus direct use of gas in vehicles. So I think that's another thing that we may see over time, is instead of turning the gas into liquids to use in vehicles, is to use gas directly as a fuel source, whether it's liquefied or not. And already, I hadn't realised actually, but already globally there are 1 million natural gas vehicles. Most of them are in Asia. But I think the kind of question is, over the next, and I'm talking 10, 15, 20 years, whether we start to see that penetration in the US.
Francesco.
The issue with the North America gas is that the average life of a single well is 1 year. So it's difficult really to sit down with your well portfolio and say, you know what, let me build a 5 million tons LNG plant, because you have to find a new well every year, or a new set of wells every year. So before you're gonna get into billions of dollars of project like the GTL of LNG, which will happen, I see the entire downstream industry is getting retooled to actually use the gas-based ethane for cracking on the plastic side of the industry, basically, the butadiene. And so I see the petrochemical first to start absorbing some of the LNG. Second, I see compressed natural gas, so I see CNG. And then you have LNG on the side, 2 or 3 big projects. And then, depending on the quantum and the size, you may have a genuine GTL, Qatar-style GTL type of project.
This gentleman over here had a question. I like this. I don't have to do any work. I would say I get paid for doing nothing, but I don't get paid for it.
If you look at the forward picture, if you take not 50 years, if you lay down a keel of a ship today, you're already out to 2050. If you really want to take a long-term view, taking the burgeoning requirement for energy in the next 100 years, not 25 years or 50 years, what is going to be beyond fossil fuel? I'm not a believer in bio, but what will be beyond fossil fuel? We can't rely on it forever.
That's a great question as well, because let's face it, with a couple of years ago in the Copenhagen movement, especially when we were at a real peak, when the IPCC had its last credible or incredible report as well, we all got very, very concerned, and we all started looking at renewables now. The problem is, Poppy, and I'll chuck this out there, so many people have lost their shirt on renewables. I look at the most excellent Mr. Ditlev Engel, the former CEO of Vestas, and I believed him, and a lot of people believed him, that we could turn this into a fantastic growth industry. He's fallen on his sword as the CEO of Vestas now. The company is struggling to reinvent itself. It's tying up with Mitsubishi now. There's been a lot of blind avenues, haven't there? And answer this gentleman's question, Piers, where do we go?
We need better technology for renewables.
But it is renewables. It's not a continuation in 100 years' time
of
hydrocarbons. We're not going to find more and more. I mean,
we will be still using hydrocarbons in 50, 60 years' time. The major growth areas in China, India, they're sitting on some of the world's largest coal reserves, and they're going to use them. So we need to make sure we use clean technology for using these reserves. But we also need to be investing in renewables for the future.
But let's get this straight. The emerging markets will use those resources regardless of how clean they are, yeah?
They will use them. They should be encouraged to use clean coal technology or clean technology to utilise these fuels.
We industrialised without those extra costs?
No, but we didn't have the technology then, did we? We used to send people up chimneys. We don't do that anymore.
Yeah, but the technology costs. This is an economy which is trying to grow at 6.5%, 7.5% a year. They've already seen it coming off the board. Last thing they want to do is put an extra layer of cost on their production.
No, but if it's an agreed worldwide cost, then it's equal, isn't it?
Is that going to happen in my lifetime?
But who can guess? In fact, you were talking about coal to liquids. I used to work in the coal industry. When I started, I was looking at coal gasification, and my boss at the time told me I was totally wasting my time because oil would have to be at $25 a barrel, and that was never going to happen in my lifetime. So who knows?
Yeah. Paul, do you want to come in on this? We haven't heard from you for a bit.
It's interesting to talk about coal in Africa. Again, I'll go back to Africa. There are massive coal reserves in Africa. They can't develop them and turn them into electricity power plants because they can't get financing from anywhere except China. If they go to the World Bank, they get refused. So, you know, they get very frustrated. I speak to lots of people across the continent, very frustrated that they can't get the money to develop those resources. And
Sorry, what's wrong with finance from China?
There's nothing wrong with finance from China.
So there's no problem. The Chinese are voracious, aren't they?
But they don't want to. They've already put too many eggs in that basket, and I think that they would like to spread spread things around a little bit.
That's very interesting. You think the Chinese are about to lessen their voracious growth in purchasing assets or rights to assets in Africa?
They're going to lessen it. No.
Lessen the pace of growth. You say
no. What's happening right now is that the Chinese have got a very firm foothold right across the continent. It's a policy to do that. The African governments, the ones I talk to, are saying we want to lessen our reliance on the Chinese and what we've been doing with the Chinese for the past 20 years.
Okay.
So there are, as I say, coal reserves that they would like to get developed into power plants, companies like us, but we can't go ourselves because it's an independent power business. So we can't go ourselves to IFC or the normal donors and even suggest building a coal-fired plant in Africa. The only place they've managed to do it was the World Bank, currently building 2 in South Africa. But even to get those projects was approved.
Let's get an answer on this question from everyone else as well. Poppy.
Well, I mean, just on the gentleman's question, I mean, one of the things that I actually find quite encouraging that isn't talked about so much in the media is that we're using less energy, should I qualify that? We're becoming less energy intensive as the world. So, if you go back to sort of the 2000 to 2005 time period, globally, for every 1% rise in GDP, oil demand rose by about 0.6%. So there's very strong correlation to GDP, but that was the relationship. If you look at the last 5 years, that relationship has dropped to 0.3%. So 1% rise in GDP, you're only seeing about a 0.3% increase in oil demand. So I think when you look out 100 years, one of the things that is encouraging is that we're using our energy a bit more wisely. I mean, there's still room to go, but looking at building standards, looking at automotive standards, some of the regulation around that, a lot of it's quite low tech. It's insulation, it's lighting, it's double glazing, triple glazing maybe we've got over there, is having an impact.
Okay, great. Francesco.
I agree 100% with what Poppy is saying, but I would also add that just a data point, as of today, 30 to 50% of the resources in every given field stays there. We don't have the technology to take it out. So all the production that we have today, it can only mine anywhere between 30 to 50% of any given field. So unfortunately, what happens after hydrocarbons, there's going to be more hydrocarbons. And the future, in 100 years, you'll have a component of renewable, efficiency will be there, but I don't really see it without hydrocarbons, even in 100 years time frame.
I think we want to start with this gentleman.
On a similar point there, I mean, some time ago, people were very worried that London was going to be 6 foot under horse manure because of all the taxi carriages, and then the internal combustion engine came along, and that wasn't a worry. If you think back 25 years ago, would you have believed that people would be, your grandmother would be talking to your kids, Skyping and that sort of thing? You'd have thought that was Star Wars type technology. So you say hydrocarbons are here for the next 100 years, perhaps, but what is the industry really doing? And what about nuclear? And to people from the oil industry, to what degree are you going to go forward, hedge your bets and move into other areas? And can you see revolutionary change if you were thinking, as it were, for the white swan as opposed to the black swan? What would you all think that might be?
Can I add to that question, Ian, and just say, I noticed a few years ago, and I'm talking, let's say, 2008, 2009, the energy companies were still really, really excited about renewables. They were investing enormously in those. And I feel there's less of an impetus now. I feel some of the renewable excitement has dissipated somewhat. Am I wrong?
Well, let me just go to the question there very briefly. I think it was Sheikh Yamani famously said the Stone Age didn't end because they ran out of stones, and the oil and gas age won't end for the same reason. Somebody will come up with something better. There really is about 200 or 300 years of gas available in the world, so we're not going to run out of gas anytime soon. I think what we're seeing with renewables now is essentially a first generation renewable industry of wind power and solar power, and that in 20 or 30 years time we're likely to look at this and wonder what we were playing at, what we were doing, and what we were really
it's going to be cheap.
really thinking of. Well, the technological breakthrough that has to happen in the future is an effective way of storing electricity. Yeah. And if that technological breakthrough comes, not if, it will. Inevitably it will come at some point in the future. And once somebody does that, then we probably need to be. I probably need to be looking at a different line of work. But I may well be retired before then. So it's. If you ask why are we not going into nuclear, because we don't have any nuclear engineers in Chevron. I mean, it's a simple answer to the question.
Chevron's got very deep pockets, but if you think it's a great area,
we're an oil and gas company, and we're very good at being an oil and gas
assets,
business.
can't you?
Sure, you can. You could buy all sorts. I remember in the 70s we bought Montgomery Ward because we thought that was a good idea, diversification. But I think it's better if we stick at what we do well. We are the world's biggest producer of geothermal industry. Why? Because geothermal energy. Why? Because it's drilling. It lends itself to the type of skills that we have, and it's something that we can go into. We do wind farms around the world, generally as part of a social contract with the governments in which we're working and so on, where they ask us to do things like this. But other companies do that better than us, and other companies don't burden projects like that with our type of overheads. And so I think that we need to stick with what we do well.
Piers?
Yeah, I think there are some exciting new technologies coming already in nanotechnology for solar panels, which is greatly increasing their efficiency. For things like nuclear, the problem is subsidies. If it's your own money and you're comparing technologies like by like, nuclear's not in the equation. Nuclear only exists because of government subsidies.
Okay. Any more questions from the audience? I don't know if it's the next panel or lunch. It's a bit early for lunch, isn't it? Energy prices are no longer an economic menace as they were 5 years ago, half a decade ago. That's what it said at the starting line of my notes here. I'm not sure I agree with that. I think energy prices that have stopped at $100 a barrel may have produced a wonderful environment for many of the producers to have confidence in investment. But has it created a dented consumer environment? Has it added to the economic malaise we've seen over the last few years? We're all happy on this panel, are we, at $100 a barrel? Let me start off with you, Francesco.
First of all, I see more pressure on pricing than people may think. There's 2.5 million barrels of oil, which is currently stuck in Iraq, Libya, and Nigeria, and that will come back to the market. U.S., as you said, went already from 8 down to 4 of imports, so there is 4 million that they're throwing back into the market. So $100 looks great, but I do see a lot of pressure, and volatility will continue to be there. You'll have times where it's going to go down to 70, 65, and times where it's going to be 110. So I don't see this as being more stable than what it used to be. If anything, I see it to be more volatile than what it used to be. Especially with the downward pressure.
Why? I don't understand it. I don't understand. I asked Piers the same question this morning. I think we chatted about it last night as well. I don't understand when gold is oscillating. Right, it's not an industrial metal. While copper is oscillating. While iron ore, while gas is at ridiculously low levels in the United States. I don't understand why oil stopped, and it stopped at $100 a barrel and stayed there. I appreciate that there's some equilibrium argument, but for 2 years? Despite everything that's been thrown at it?
Listen, the only answer that I could give you is, again, the next oil is way more expensive than it was used to be, and it's inevitable. So the new frontier, the deep water, the heavy oil, the new discoveries are way more expensive than before. And on top of that, you have the entire OPEC that is using oil as their main source of income that needs to balance a pretty complex growing economy and don't really have any other ways to get to it.
Poppy?
Agree with what? I don't think I've got anything more to add to
that.
I think you summarised it pretty well. The only difference on the commodity side is the demand dynamics are clearly different. So when you look at some of those bulk commodities, it's very much dominated by China, whereas demand for oil is much more evenly spread around the world.
Let me get a response from the chaps, and then I think we'll wrap it up there. Paul?
I agree totally with Francesco that nothing more to add.
All right, okay. We all seem very comfortable. $100 a barrel so far. Chevron's not going to disagree, are they?
No, we're not. On gas, it's not a fungible product. So you'll pay $4 in North America, or you'll pay $18 in Japan. And it's just because it can't be moved around in a way that oil can, and therefore evens the price. $100 appears to be a sustainable price. $150 is not. When the price jumps up to $150, it creates economic recession, and it's not a sustainable price level. So it's not in our interest to see a price at that level. The current price level appears to be sustainable, but it will change. That I can guarantee.
Yes. Final word.
Well, you were insinuating that it's expensive, and I think
it is expensive.
If you look,
energy bills have gone up for all of us.
If you look at what we have to do to get the oil out of the ground. You know, it's 200 million just to drill one hole, £250,000 a day, sorry, $250,000 a day for a rig.
And all that fantastic technology you were just telling me about will make everything cheaper, you said.
$100 a barrel. If other commodities were priced in barrels, now a barrel of oil is 160 litres. Now that puts Diet Coke at 170 barrels a dollar. You're not, sorry, $170 a barrel. So you're not complaining about the price of Coke or the price of milk or water, which is far more expensive than oil.
It will happen, guys. There will be 75 bucks or there will be 125 bucks. And then I want to get this lot back and you lot back to discuss as well, because I think I'm in the minority thinking $100 a barrel will not last ad infinitum. But I think it's been great, and I think you guys have led it as well. So thank you very much indeed for that. Let me thank the panel individually. Poppy Allonby, Piers Riemer, Ian MacDonald as well, Francesco Giuliani, and of course Mr. Paul Hinks as well. Thank you very much indeed for being a great audience.